I'm Greg Hunter. Welcome to USAWatchdog.com. With us, return visit by a gold broker, gold expert, market expert, financial writer extraordinaire. I'm talking about Bill Holter, a real favorite here at USAWatchdog.com. Bill, thank you for joining us today on USAWatchdog.com.
Thanks for having me back, Craig.
I want to start with this articles of impeachment just yesterday. They're going off the cliff, Thelma and Louise style. All the Democrats in the car with their hands up in the air with the phony articles of impeachment. This, I think, is also a smokescreen with the FISA report, which was contradicted immediately by the Attorney General and his top prosecutor, Durham. At least the part of it that not being political and being a legitimate investigation. I want to start there. I mean, that's just unbelievable. A attempted coup, a report on FISA about them using a dossier paid for by the a person in the other party, the candidate of the other party, Hillary Clinton, who took over the DNC, using that for spying on the candidate Trump and President Trump, and then out with it articles of impeachment. The same news drop, the same cycle, which is stunning to me. All this to say, wow, what do you think that this kind of turmoil and prosecutions are coming? Obviously, they're prosecuting the president to try to kick him out of office. What do you think this all says about the stability of the financial system here in the U.S.?
Well, first, you have to say it's quite the coincidence that the two come together, FISA and the articles of impeachment. As far as the articles of impeachment are concerned, I hope they vote today, tomorrow. And I hope that they impeach President Trump and it goes to the Senate, because the discovery in the Senate, if they don't just blow it off and say we're not even going to vote on it or vote it down, I would love to see the Senate dig into it. And really what they would do is uncover all kinds of fraud and wrongdoings. You're asking me what will arrests from these faulty FISA warrants do? Basically, Greg, we're already financially and socially inside the gates of hell, and you see big name arrests, and I mean obviously big names from the previous administration all the way up to the top. If you see those arrests, you're going to see an awful lot of happy people, an awful lot of freaked out people. Could lead to civil war. And from a financial standpoint, I don't see how markets can stand up with the amount of leverage in the system at this point. And they're already having a problem holding that leverage up. From the standpoint of foreigners looking at the U.S., foreigners will probably begin to pull their capital hard and fast.
There was somebody, if you look at this FISA thing, buried in this report, somebody did interfere with the election, and it was the person that paid for the Steele dossier. Hillary Clinton paid for the Steele dossier, and
Right.
also in the report, it says they wanted Steele to go to the press to get this out there.
Right, but Greg, we knew this a year ago. I mean,
But now it's official.
right.
So now we officially, Hillary Clinton did pay for that. She took over the DNC. She
right,
did pay for it.
And it came from the Inspector General, who has been a longtime Democrat supporter.
Yeah. I mean, she wants to run for again. There, she talking about running for election again.
Yes.
They couldn't cheat her in the last time. They had to cheat her past Bernie Sanders, and they couldn't cheat her. And Project Veritas had an elaborate thing about the voter fraud in the 2016 election with the Democrats and Hillary Clinton. Go ahead.
No, I just the fact that revelation is now out official, but came from a Democrat supporter. I mean, how do you impeach that?
We're living in times that I've never heard of. in history books I've never seen. I mean, we were blazing a trail historically. That's why I wanted to start with this.
Well, Greg, you've never heard of it in history books because nothing like this has ever happened.
I mean, you put this with, and I'm just kind of feeling around here through the dark here, Bill. But you got all this missing money. There's the day Trump comes into office, it's 20 trillion, and then add the 21 trillion, and now it's 43 or 44 trillion dollars of actual. We owe this. This is the money that's out there, not future. And then you take a look at what's going on in the repo market since September. Is 100 billion a night, a lot of nights or more.
Right. Yeah, roughly $100 billion a night. And what that's showing you is the credit markets internally are broken. I wrote about this yesterday, and Zero Hedge put an article about this yesterday. It had been thought that the reason money was not flowing into to fund the repo market was because banks didn't trust other banks. And part of the supply demand problem is because JP Morgan has altered their portfolio. They've taken cash reserves that were in the past used for the repo market. They took, I think, about 130 billion, or at least that's what it looks like on their balance sheet. They took 130 billion and moved that into bonds, into the credit market directly. So that's 130 billion that a year ago was night after night going into the repo market, and it's no longer there. An analyst from the BIS came out, I think, late last week, and said that the hedge funds now comprise about 20% of the repo market. And of course, what they do with that money is they take risk on positions, they do arbitrage positions. The point being, they've become the marginal factor in the repo market.
What do you mean marginal factor?
If they're only 1 or 2% and they just whatever they do does not affect the market, but at 20%, when they move, it's on the edge, and the edge is what causes price, or in this instance, interest rates to move. Now, what's happened is, and this is what it looks like, and I talked to Jim about this last night. He said, yeah, that's what it looks like, but how do we even know the numbers are for real? So with that as a caveat, assuming the numbers are real, hedge funds are prone to, if you want to call it a bank run, hedge funds are prone to large liquidations. And the banks themselves, who have been funding the overnight repo market, now seem to fear a run in the hedge fund market. That's why they're withholding supply to that market. And that's why interest rates have gone up. It does smell, to me, it smells like a bank run, if you will, in the making, because if the credit doesn't get through to these hedge funds, that means they've got to unwind positions. And their positions are levered 7, 8, 10, or even more times over. In other words, a dollar can control $10 or more. If they don't get that borrowed dollar, that means they've got to sell $10 worth of stuff, whatever it happens to be, whether it be bonds, stocks, whatever positions they're holding.
You're saying the markets could crash.
Right. That's what I'm saying. Is it's the market, and I've said this all along, is that markets have been held up and have continually moved higher based on the use of credit, leveraged credit, leveraged derivatives. And if you take the credit out from under it, it's not dollar for dollar. It's $5 or $10 or $20. For every $1 of credit that gets pulled, that amount is going to have to be sold. So what you're looking at is the credit has held the markets up to this point. But if credit is not forthcoming, then yeah, you see a market crash because you'll see forced selling. And this really goes back, as if you want to call it, a microcosm of Richard Russell's inflate or die. That this is part of it.
What could go wrong? I mean, we got 60 billion a month. We didn't even talk about that. I mean, it just, nobody in the financial news. I watch this during the day. Not a word. It's okay. Normal. It's fine. 60 billion a month. It's normal, right? It's normal. It's okay. Overnight, 80 billion. I don't know. I just saw 80 billion, 100 billion, 120, 134 billion. I mean, these numbers are just overnight. And so, what could go wrong is my question. Seriously, what could go wrong?
Well, I mean, obviously, you could have a run on a hedge fund. You could have a hedge fund failure. You could have a bank failure. Remember, Greg, it was 2010 when we found out that there was $16 trillion lent all over the world by the Federal Reserve. So we really don't even know what is going on under the surface or behind the scenes. But that said, you can be pretty sure that it is nefarious.
And it's big.
It's huge. Greg, the system is so big today and so complicated. Uh, it, I guess you could equate it to flying like a 737 Max. You've got computers fighting against each other, and the plane at this point is in a situation where it can't be flown. It can't be flown by man, and the computers are fighting each other. It's not going to be flown by computers.
Eventually, the conflicts are so great that the market breaks down.
Right. Well, call it push pull, whatever you want to call it, but you have there have been so many lies over the years that the lies go against each other, and you actually have official, if you want to call it official movements, moving against each other.
How, what I've said this before. People ask because they say all the time, "What should little people do? What's it going to look like for little?" Let's start with this. What's it going to? You've said this before, but I want you to really let people know because I've been doing this thing about this 40 trillion. We ain't never paying this back. I mean, anybody who's thinking that we're going to pay this back someday, no, we're not.
Not possible.
Not possible, and no intention to do so. And I think the party over moment wasn't.
And it's not just the U.S., Greg.
Everybody's part. China's. That's why China has 40 trillion, and that they've doped up.
And Japan and Europe. I mean, none of this money is going to get paid back.
Come on, stop the Donald Trump is blowing up the debt. Stop it. Stop, please. Stop. When were you? We fought 2 wars. We didn't have a draft, and we didn't have a single tax increase, and it was trillions of dollars. When was everybody going to wake up to the fact that they're just going to keep printing? When and now Donald Trump he's blowing our economy up.
Well,
really?
We had to go to war in 2001, 2002 because the economy was in decline, was in serious decline. And war reflates the system. I mean, that was the plan. And what they've done is reflate ever since. I mean, the war machine creates cash flow, creates, I don't want to say profits, but it creates grease for the engine.
Correct. They have to spend money for bombs and tanks and
right. Exactly. And they had to do that.
Whatever.
They had to do that after 9/11, which that was a false flag, obvious, and anybody who doesn't understand that it's a false flag,
Yeah, no. You can't explain Building 7. I mean, you
can't explain any of it, Greg.
Yeah.
The only way you can explain it is it was done because we had to go to war. Because we had to have something to turn the economy.
And what does this look like? Well, number one, we could, some people are saying we're just going to get war. I mean, I've heard this, Donald, what you just said with With 2001, we had to go to war. Gerald Celente has said, when all else fails, they take you to war.
Right.
And so, I
That's been
mean,
the game plan.
are we headed towards a breakdown first, or are we headed for breakdown and war, or war and breakdown, or what are we going to get?
Uh, the timing of that is above my pay grade. I mean, who knows? Who knows? Whether we have a false flag, whether we have a skirmish in the South China Sea, whether we have a skirmish in the Middle East and it blows up. I mean, who knows? The only thing I can tell you is mathematically, the amount of debt in the system, not just in the U.S. but worldwide, cannot be paid back, and something has to happen. Hopefully, that something is a reset followed, a man-made reset, which will not work, followed by a Mother Nature reset. Where war fits in, who knows? It could be before, it could be during, it could be after. It's hard. That's impossible to say unless you're inside the Pentagon.
I don't see how this doesn't, this has been my going theme in my head, and I cannot get it out of my head. I don't see how, if we're never paying back the debt, means we're never paying back the bonds, means the JGB bonds are no good, the EU bonds, even negative rates, are no good, means the Great Britain bonds are no good, that means the Chinese bonds are no good. None of these bonds are any good. I don't see how.
Well, what does that mean, Greg? Those bonds are not good. What that means is those assets are not good. Because remember, that's borrowed money, but somebody owns them and considers them an asset to their portfolio, whether it be a pension plan, a hedge fund, an insurance company, you name it, or banks themselves. Those assets are already impaired. And when I say already impaired, they're impaired because mathematically they cannot be paid back in current terms.
So we can't get out of this without one. Tell me if I'm wrong, and please explain this. Can we get out of this without a massive default on debt around the world? Explain.
No. And that default is either an outright default, which I highly doubt. Politicians don't do that. But what they do is they debase the currency. They make the currency worth less. In other words, if it costs you $2 today for a cup of coffee, then that $2 next year, or after the debasement, it's going to cost you $20. And what they do is they lop the zero off the currency, and magically it's $2 again. But it's only got it's only 20 cents of purchasing power.
You think that the default will happen in massive inflation?
It has to, because it's a fiat system. If we were on a gold standard, you could have outright deflation. Now, you can have deflation of asset prices, and that's going to happen, but you cannot have a deflation where fiat currency becomes worth more or have more value. That right there is the flaw in Harry Dent's massive ad campaign. Gold's going to collapse and we're going to have massive deflation. You cannot have massive deflation in a currency that's freely printable and has no cost to print it, because that's what they'll do, is they'll continually print, and that will blow up the value of the currency, otherwise known as hyperinflation.
Well, they printed that extra 21 trillion. This is according to Dr. Mark Skidmore at Michigan State University. His team,
right.
They wrote about it at the university. This is not a tinfoil hat thing.
Right. No.
And then they answered it by saying it's a national security issue, basically. What you're talking about, it already happened. They've already printed up an extra.
Yes, the money's the credit. First off, you have to understand, money supply is created when credit is created. So the money supply expands as credit gets created, and we're living in the biggest debt bubble of all time. So yeah, that capital has been created, but in a fiat system, when the debt breaks, which is what created the money in the first place, once the credit markets break, the currency cannot go up in value. The currency declines in value. The currency becomes worthless, goes to zero.
I mean, this isn't going to be a one and done. This FISA thing is just the first chapter of about a 10, 12 chapter book, and this
On,
is going to
on,
go on for a
on
while.
FISA?
Yeah, I mean, because FISA is just the opening chapter, and
Right,
then you
right.
have Durham and Barr, and they're contradicting the whole premise that it was a legitimate investigation and it wasn't biased. Come on, stop.
Well, I mean, that's a joke. That's a
I mean,
complete
all
joke.
the efficiencies or all the mistakes in the investigation all went against Trump. Come on. I mean,
Well,
but
right.
what I'm talking about is the environment of this investigation, charges, that kind of stuff. With the what you're describing as the system being, the biggest debt bubble in history, that's not going to extend the debt bubble. That's going to shorten it, is it
No,
not?
no, that breaks confidence. It will, in a sense, and I've gone back and forth on this with Sean before. I believe it breaks confidence. He believes arrests, indictments will increase confidence. I'll agree with that in a long term sense, but I don't think uh, initially that breaks confidence, not only inside the United States, but it breaks confidence outside with foreigners. So uh, whether let's put it this way: if there are no arrests, then we live in a complete banana republic land, and I wish I was 10 or 20 years older because my life would be finished and I wouldn't have to deal with what's coming under that type of regime. Assuming that we do get arrests, and I honestly believe we will at this point now, because you could take what was put forth in the Horowitz report, you could take just that and prosecute.
Yeah, yeah, yeah. He had no way. He tried to make that pig. He tried to put as much lipstick and perfume on that pig
Right,
as he could.
right. But he did come out with some real illegal stuff that was done. I mean, a lawyer changing a 302, the illegality of how it even got started.
Hey,
So there's enough in the Horowitz report to prosecute, but you've had Durham and you've had Barr actually fly around the world interviewing. Uh, I think they've got all kinds of dirt. And as we started off with this was and is a coup attempt. It,
biggest one in history. It was
right.
global. It
Well,
involved our
now,
allies.
now there have been bigger ones in history because the president was shot.
Oh, well, in terms of a plan, I mean, this was a global
Oh,
plan.
this is by far the most intricate coup attempt in the history of history. And just from the standpoint of being an American, if they don't do something about this, then what does that say about our form of government?
Yeah, yeah, yeah.
I mean, something has to be done. And, it remains to be seen. I've got a very, very good friend. We argue about this all the time. He thinks, nothing will change, nothing will ever change, and that's it. On the other hand, on the other hand, I mean, I was encouraged by the IG report because, like I said, just what was in that alone is prosecutable, and I'm sure there's tons more that will be dug up by Durham and Barr or have already been dug up.
I think the governments around the world were wanting to piss off Hillary Clinton. She loses, her global charity fraud implodes, and they're trying to do what Ukraine's doing, trying to we gotta feather our bed with the new president. We have to help. I think they're going to be forthcoming in Italy and in Australia and in UK. I think they're going to be coming, especially if Boris Johnson gets in. I mean, Theresa May should be held up on charges. She was involved in this stuff. She was MI5. Theresa May, the former Prime Minister of Great Britain. But I digress. The
Right. Let me just point this out. Uh, you asked what this will do to markets. I would just say that it will initially it will absolutely break confidence when people find out how dirty, how crooked, and I mean obviously if you go down the path of mass pedophilia arrests and that whole story. Confidence is going to break, and confidence is what markets basically rely and trade on, and confidence is the largest factor in the credit markets, and the world runs on credit.
Which brings us to gold. I talk to a lot of people. I read a lot of stuff. I've had Nomi Prinzon, best-selling author, smart woman, not a big gold person, but respects it. But she's out saying dark money is going to buy gold. Catherine Austin Fitz, very smart, very well connected. It's always been you need a core asset in gold. Need enough to bribe the guards. Now she's saying you need to invest in gold. Ray Dalio, invest in gold. Head of BlackRock, CIO, invest in gold. I can't tell you one after another, big people after another. Did I tell you to invest in gold? So is this part of the reason why you're seeing these big names publicly say either gold's going to go up, you need to invest in gold, they're investing in gold, big hedge funds, big people. I just named off a few. What do you make of that? I've never seen that before, of the flood of people who aren't real big gold people. I mean, you are. I mean, I am. But people who in the past, at least publicly, not big gold people, you're seeing all kinds of people saying you need to buy gold, or we're buying gold, or buy whatever. Why? What is your take on this?
Well, they're finally figuring it out. What we just talked about, confidence is going to break. They're seeing that confidence is going to break. So what did they do? They looked what type of asset, what type of investment is there where if there is no confidence, not only doesn't get affected, but gets affected negatively, but it gets affected positively. And the answer is gold and silver, because they are non-liability money. In other words, they're not issued by anyone. They don't promise anything. The only thing they are is proof that labor, capital, equipment was already used to dig it up out of the ground. It is real money. And I think that's what's happening, is people are have gotten to the point where they believe that confidence is going to be shattered.
Maybe they're just flat out, these are humans that we're talking about, even though they're rich
Right.
now. Maybe they're just scared.
Well, yes. They understand that confidence is going to break, and they're scared as to what that means and what the ramifications are. And all you have to do is look back through thousands of years of history. The best place to have money or capital during times of panic, during times of broken confidence, every single time is gold.
Little guys, what should little guys do? What's coming for the little guys like me and you? What's coming for the little people, not the Ray Dalios of the world, not the
Right.
what's coming for the little guys?
You have to look at it from your life perspective. From your financial standpoint, the little guy should be looking at junk silver. And the reason being, junk silver is broken down. For instance, roughly 14 dimes equals 1 ounce. So if you're looking at 14 dimes versus 1 ounce, you have 14 transactions versus 1. And if you're looking at silver versus gold, the ratio now is what, 85, 86 to 1. So 86 ounces of silver equal 1 ounce of gold. So you want your capital broken down into the smallest denominations so that you can use it. You can go to a farmer and buy eggs. You can barter with it. You can't really do that with gold. I mean, you can do it, but you're not going to get any. You won't be a fair trade because you won't get any change back. And you want to get out of the system. You don't want to have big balances at banks. You don't want to hold big stock balances at brokers. Have the broker ship your certificate out to you. Because what's going to happen is you're not only going to see brokers go under, you're going to see exchanges, clearinghouses go under. So that's the financial side of it. From your personal side of it, you don't want to live in a city. You want to live in a rural area, and you want to be as self-sufficient as possible, which means you have food stocked away, you have a way to purify water, you have a way to generate electricity. you want to be able to fend for yourself for a spell. Is it 2 weeks? Is it 2 months? It could be 2 years. I mean, who knows? But when the credit markets break, distribution, everything is going to stop. And distribution being the most important, because that's how food and goods get to your local grocery store and Walmart. And then just going one step further, how do you protect yourself? You obviously need to be able to protect yourself, and that means having arms, ammunition, and knowing how to use them. And most important of all, make things right with your maker, because what's coming is not. This is no small event. This is going to be the biggest financial and social event the world has ever seen.
One last thing, we haven't talked about cash at all, and I just wanted to just touch on that because a lot of people, the dollar's going to burn. Well, yes, it will, but I read something in 2010. This is going on 9 years ago. 321 gold. Smart guy, and he started off by saying he was at 321 gold, and he said, "I know I'm going to make a lot of people mad, but." A lot of people thought this was going to blow up back then, but then there's that 21 trillion missing, hidden money that they used
that was used for derivatives
to
hold the system together.
That's how they missed it. That's Rob Kirby says. Now we know how they did it, and nobody could figure out why the hell did this blow up? Because they had spent more money than anybody ever. Anyway, he said, cash is going to work really good for a short amount of time. Do you agree with that? Cash is going to work.
Absolutely. Yeah, I think once we get to a if you want to call it a light switch event where credit breaks, banks are closed, if you have cash on hand, it will spend, and you're going to want to spend it as fast as you can buying stuff, whatever stuff is available. And you don't want $100 bills. You probably best want $20 bills so that it's in small denominations. But I could see the dollar spike for 2 weeks or a month. Just because if banks are closed, that means there's no use of credit cards. There's not a lot of cash out on the streets, so it will become dear. But people will very quickly understand that all that is a piece of paper with numbers printed on it.
Right. But your window is a couple of weeks, a month, 2 months. I mean,
no, I don't think it goes 2 months, Greg. I could see the dollar spike for 2 weeks to a month. I don't see it going much more than a month.
Cash is a good tool. Cash is a good tool in your mind.
You should have some cash on hand for the initial, onslaught of whatever happens. It will spend for a couple of 4 weeks, and then after that, I think it'll be shunned.
You and Jim, and somebody else in your podcast every week. I think there's usually a third, but at least you and Jim. With your podcast, tell me what you offer. You offer a $129 a year subscription. Is that right?
Right.
And then you get access to your writings because you put some of them out for free on jsmindset.com, and then there's many of them with this analysis with your repo market, which is excellent. Thank you for bringing it out here. But tell me about your sign up, your subscription, that kind of thing.
Well, I write a couple articles. Generally, a couple articles per week. That's for subscribers only. I occasionally, maybe once a month. At this point, I'm only I'm doing a public article about once a month, and then every Saturday, Jim, a fellow named Dave. He was the smartest client I ever had while I was a broker, and another guy, Denny. Denny acts as the moderator for the three of us. And we do basically a roundtable discussion for subscribers.
Wow.
So you get 52, or say 50, because there's probably a couple holiday weeks in the year, but essentially you get 50 seminars per year, and they're generally about 1 hour long, and they're not boring. I can assure you that.
No, well, you're really smart, and Jim is super smart, and all really experienced people, and your site's still a favorite. I have it marked to my favorites at jsmindset.com. And so it's just always good stuff on there. I mean, the nice thing about you guys is you have a subscription side, but you also still have a pretty good public side of analysis and articles. And and stuff like that, which is, a lot of people can't do that. A lot of people don't do a very good job of that. But you guys really fund a really good public side, which I know you have ads on it, but it's just Google ads. I know you don't have any control over it. But you also have that, a good public side, and you have your subscription side. But anyway, listen. Thank you for coming on USAWatchdog.com. I appreciate putting your brain on your analysis on Parade here. Thanks for coming on. It is Bill Holter. He is a financial writer, gold, silver expert, market expert at jsmindset.com. Bill, thank you for joining us today on USAWatchdog.com.
Thanks for having me, Greg.